A lot of people struggle with understanding the complete accounting cycle, where to start from, how to record transactions, or how to make sense of financial statements. If that sounds familiar, this tutorial is for you. So what are we learning today? By the end of this video, you will be able to confidently prepare any kind of financial statement with a solid foundation of the basic principles behind them. Here's what we'll cover: how to create a chart of accounts to set the foundation, how to record general journal entries with precision and clarity, how to build a dynamic ledger that updates automatically with a single click, how to prepare a trial balance to ensure your books are balanced, how to create an income statement that measures profitability, and finally, how to prepare a balance sheet to showcase the financial health of your business. This video will walk you through everything step by step, from journals to ledgers, trial balances, and all the way to financial statements using Excel. So, if you're ready to master these essential accounting procedures, don't forget to subscribe to the channel and let's dive in together. Before we dive into practical steps, let's understand some key principles of accounting. This will help you grasp the why behind every action we take. Every transaction has two sides, a debit and a credit. Think of it like a seesaw. For the system to stay balanced, what goes up on one side must go down on the other. This ensures your books always align. The accounting equation: assets equals liabilities plus equity. This is the backbone of every balance sheet. Assets represents what the business owns, while liabilities and equity represents how these assets are funded. Now, the two key financial statements: we have the income statement and the balance sheet. The income statement tells us if the business is making money by comparing revenue and expenses. The balance sheet shows the financial health of the business by listing assets, liabilities, and equity. The chart of accounts: think of this as your accounting dictionary. Every account, like cash, rent expense, or revenue, is categorized to ensure transactions are recorded correctly. Now, what's the importance of this structure? A well-organized accounting system saves time, it ensures accuracy, and simplifies financial reporting. That's why setting up your charts of accounts is the first step in this journey. So now that you've got a basic understanding of accounting principles and their importance, let's dive into the practical side. So where do we start? Every great structure needs a strong foundation, and in accounting, that foundation is the chart of accounts. Think of it as your financial roadmap. It categorizes every type of transaction your business might encounter, ensuring everything is tracked correctly. So this step is crucial because it sets the tone for all your financial reporting. Now, we have 5 major types of accounts. We have the assets, liabilities, equity, expenses, and revenue. Assets represent what the business owns. They have a debit balance, meaning an increase is recorded as a debit and a decrease as a credit, and the asset appears on the balance sheet. Next, we have liabilities. These have a credit balance, so an increase is a credit entry and a decrease is a debit. Liabilities also appear in the balance sheet. Equity. This represents the owner's stake in the business. It has a credit balance and is found also on the balance sheet. The expenses. This represents cost incurred. It has a debit balance and are recorded in the income statement. And finally, we have the revenue. It represents earnings from business activities. These have a credit balance and are also recorded on the income statement. Assets can be grouped into current assets, e.g. cash, accounts receivables, and fixed assets, e.g. equipment. Liabilities can be divided into short-term liabilities, e.g. accounts payables, and long-term liabilities, e.g. bank loans. Then we have the individual accounts. This will be populated based on the raw transaction data I have posted here. So when looking at raw transaction data, the nature of each transaction determines its categorization. For example, when you look at the first transaction, investing £1 million in business, this affects cash, that is current assets and owner's equity. So when you look at the first transaction on the list, investing £1 million in business affects cash, which is a current asset, and owner's equity with a sub-account equity. renting office space for 5,000 per month affects rent expense, the sub account for that is expense. So I would have expense typed in as the sub account. The next transaction, purchasing equipment worth 50,000 pounds. This affects equipment, a fixed asset, and cash. We have cash already, so I'm going to type in equipment and have fixed assets listed as the sub account. To save time, I'm going to quickly fill in the individual accounts for all these transactions in the background. I believe you already understand the principle behind it. So here is the list of all the individual accounts based on these transactions. These individual accounts will be used as inputs when creating a general ledger later. Now that we have our charts of accounts, let's create another sheet for the general journal. So I'm going to click on the plus button, have the sheet name renamed to general journal. This is where all the transactions will be recorded. So what is a general journal? The general journal is a book of original entries in which raw business transactions are recorded in the date order according to which events occur. A general journal is the first place where data is recorded, and every page in the item features dividing columns for dates, description, as well as debit or credit records. We need a column for the headers, so let's create that. So we have the date, the description, the accounts column. This is going to be linked from the chart of accounts using the drop-down list. As you're already aware, for every entry there must be a debit and a credit. To organize everything, we're going to convert this into a table. So select the headers, press Ctrl T on your keyboard, make sure my table has headers box is checked, and click OK. Now, whatever data you'll be entering will go directly inside the table. By having it formatted as a table, you can easily manage and analyze your entries. I'm going to get the transaction line items from the chart of account sheets and have it pasted on the side here for easy access. Now, let's start the entries. Let's say you're launching a tech startup. First things first, we need to invest in our business. So let's say we invest £1 million of our own money. This increases the business cash and owner's equity. So we will enter a transaction date, e.g. 1st of March 2024. In the description column, I would enter initial investments. For the accounts, we need a drop-down list of the individual accounts listed on our chart of accounts. So select the cells under the accounts header, go to the data tab, click on data validation, select list from this drop-down. Our source will be the individual accounts listed on the chart of accounts. So go to that sheet and select the listed individual accounts. Then click OK. Select cash from the accounts drop-down. Enter £1 million in the debit column. For the other leg of the transaction, we're going to have the same date, the same description, and this time we're going to select owner's equity as the account and enter £1 million in the credit column. So we have debited cash because this increases your business cash balance, and the owner's equity has been credited because it represents investment in the business. And like I said earlier, cash is an asset, a debit balance. Any increase will be debited. Owner's equity is a credit balance. Any increase of it will be credited. Next, we need a place to work. Let's say we rent an office space for £5,000 per month. So I'm going to enter a transaction date for that. Write office rent as the description. Select rent from the accounts drop-down list. For the debit side, I would enter £5,000 because it's an increase in expense and expenses are recorded as debit. And for the credit side, I'm going to enter the same date. Make office rent also the description. The other leg of this will be cash because we have spent cash to pay rent. So I would select cash from the drop-down list. Cash is a debit balance. There's going to be a reduction to it because it's been used to pay rent. Its reduction will be recorded as credit. To operate our business, we need equipment. So let's say we buy computers and servers for £50,000. And we will have a transaction date entered. Write office equipment purchase as the description. And select equipment from the accounts drop-down list. Equipment is a fixed asset. We've just added to it. So an increase of it will be recorded as a debit. So on the debit side, I'm going to enter £50,000. What was used to buy the equipment? Was it cash? Was it bank? Was it on credit? From the line transaction, we can tell that it was bought with cash. So cash will be the other leg of the account. So I'm going to enter the same date for the other leg, give it the same description, and select cash from the drop-down list. There's going to be a reduction to our cash also, which is an asset. So for that reason, it's going to be a credit entry against cash of 50,000. Now let's focus on developing our product. We spent £200 on software development and testing. So I would give that a date, 15th of March 2024. Write software development as the description. Select research and development expense from the drop-down list. And for the debit side, I would enter £200,000. The R&D expense increases and expenses are recorded as debit. For the other leg, I'm going to select the same date and the same description. The other leg is also cash because cash was spent on the research and development expense. So select cash from the drop-down list. With this transaction, cash decreases and its reduction is recorded as a credit. So on the credit side, I would enter £200,000. To reach our customers, we spend £50,000 on marketing. I would enter a date. Write marketing campaigns as the description. Select advertising and promotion for the debit side and enter £50,000. Advertising expense increases and expenses, like you know, are recorded as debit. The other leg of it is cash. Cash is still being used to pay for the advert expense. So it's going to have the same date and description. Copy that and paste it down below. Have cash selected and enter £50,000 on the credit side. Now let's say we make our first sale on credit. This involves 4 accounts. When you sell a product, 2 primary things happen. The first is revenue recognition. You've earned income from the sale. And the second is cost of goods sold. You've used up inventory to fulfill the sale. To accurately record both aspects, we need 4 accounts. Accounts receivables or cash. This account represents the money you're owed by the customer in the case of a credit sale, or the cash you've received in the case of a cash sale. We need the sales revenue account. This account records the income generated from the sale. We need the cost of goods sold account. This account represents the cost of the inventory, that is the raw material, the labor, and so on that was used to produce the product. And lastly, we need the inventory. This account tracks the value of your inventory. As you sell products, your inventory decreases. So if you make a sale of £100,000 on credit, we're going to give it a date. Write credit sale as the description. It's going to be the same date and description for the other side of the account. So I will just have that copied now. Select accounts receivable for the debit side and enter £100,000 under the debit side. Accounts receivable is an asset, a current asset. With this sale on credit transaction we are recording, the accounts receivable will go up, meaning there's been an addition to our debtors list. So to recognize that in our account, it's going to be a debit. The other leg of this account is revenue. So I'm going to select revenue or sales from the drop-down list. Sales revenue has gone up. And sales revenue, like you know, is an income and expenditure account with a credit balance. And so for that reason, we're going to enter £100,000 on the credit side for sales. I mentioned earlier that we will be needing 4 entries for this. So I'm just going to copy this date and the description again to use for the other 2 entries. Now for the cost side, I'm going to select cost of goods sold and enter £50,000 for the credit. Let's assume that the cost that went into the inventory that was sold as revenue is £50,000. So I'm going to enter £50,000 on the debit side for cost of goods sold. Cost of goods sold is an expense in the income and expenditure account. So because there's an increment to it, we have it entered as a debit balance. And lastly, the last account affected is our inventory account. So I will have that selected from the drop-down list. There's been a reduction to our inventory because some of it has been sold here as a revenue. And the cost of that inventory that's been sold is also £50,000. So enter that on the credit side. Inventory is an asset with a debit balance, remember. So its reduction will be recorded as a credit. Now let's say we make another sales for £5,000 and receive cash immediately. In this case, we are going to assume that the cost of goods sold is £2,500. This would also need 4 entries. So I'll give this a date of say maybe 30 March 2024. And write cash sales as the description. Copy this down for the other 3 entries. Now, what's the first entry? Cash. We have just received cash. Cash was received for these sales. So I'm going to select cash and enter the £5,000 we received on the debit side. For the credit side, I would select revenue and have 5,000 entered. So there's been an increase to cash, which is a debit balance and it's been added to the debit side. The revenue has also gone up. Revenue is a credit balance in our income and expenditure accounts. So its increase has been recorded as a credit. For the cost side, I will select cost of goods sold and enter $2,500 as the cost on the debit side. The cost of goods sold is an expense. It's been increased and expenses are recorded as debits. I will select inventory for the other leg, enter $2,500 on the credit side. Inventory is a current asset that has been decreased, so its reduction is recorded as a credit. Now that you have a good understanding of the principle of debit and credit, I'm going to quickly make entries for the other transactions without wasting much time. So you pay monthly rent for £5,000, would give that a date. Rent payment as the description. Select rent from the drop down and enter 5,000 on the debit side. Rent is an expense that has gone up. Have the same date and description for the other leg of the entries. Rent was paid with cash, so select cash from the drop down and enter 5,000 on the credit side. There's been a reduction to the company's cash. Paying employees' salaries. You pay £10,000 as employees' salaries. Give that a date. Salary payment as the description. Select salary expense under the accounts. Salary is an expense, a debit balance, so an increase to it will be debited. For the other leg, copy the date and description. what was used to pay salary is cash. So I will select cash and give it a credit entry. There's been a reduction to cash, which is an asset, a debit balance. You receive a payment of £100,000 from a customer for a previous credit sale. This sale you made here, the customer has now made the payment. So what has happened? Your cash is going to increase and your accounts receivable will go down. So the two affected accounts here are cash and accounts receivables. So give it a date. Description is customer payment. Select cash for the debit side. There's going to be an increase to cash, and enter £100,000 on the debit side. The other leg is accounts receivables. So copy the date and description. Select accounts receivable from the drop down and enter £100,000 on the credit side. Accounts receivable is a current asset with a debit balance, so its reduction will be recorded as a credit. Next, you borrow £1 million from a bank for 5 years to fund your business expansion. Let's say this happened on the 15th of April 2024. Write long-term loan as the description. Select cash for the debit side because we have just received cash. There's been an increase to cash, and have the £1 million entered on the debit side. Cash increases and its increase is recorded as a debit. For the other leg of the account, select long-term loan payable from the drop-down and enter £1 million on the credit side. Long-term loan payable is a long-term liability in the balance sheet with a credit balance, so an increase to it will be recorded as a credit. Next, you borrowed another £50,000 from the bank. This time it's just for 1 year to cover short-term expenses. So give that a date. The description will be short-term loan. I will select cash for the debit side again. We've just received cash but as loan, but our cash has gone up. So enter the £50,000 on the debit side against cash. For the other leg of the account, I will select short-term loan liability from the drop-down. Short-term loan payable is also a liability in the balance sheet, but it's a current liability. It's also a credit balance, so an increase to it will be recorded as credit. Now you've purchased inventory worth of £2,000 on credit. We'll give that a date. Write inventory purchase as the description and select inventory from the drop-down list for the debit side. So we purchased an inventory. It means our inventory has gone up. Inventory is a current asset in the balance sheet with a debit balance, so an increase to it will be recorded as debit. So I would enter £2,000 on the debit side. For the other leg of accounts, the inventory was purchased on credit, not with cash. So the other leg of accounts would be accounts payables instead of cash. So I will select accounts payable from the list. Accounts payable is a current liability in the balance sheet with a credit balance. It's been increased. It's a current liability together with a short-term loan liability. They are both with credit balances. So an increase to it will also be recorded as credit. Next, you pay £1,000 in cash for office supplies. We'll give that a date. Write office supplies purchase as the description and select office supplies expense for the debit side. I don't think I have that listed on here, so I'm going to go quickly to the chart of accounts and include it on the list. That's an expense account, so have that included. Now, if I go back to the general journal, I should be able to get it on the list. It's still not showing. So let's amend the range. If you go back to the data tab, click on this drop down, select data validation, and let's see what the range is. So it's up to here. I need to have it extended to go down a bit more. So it covers for office supplies. Click OK. Click on refresh all to refresh that. I should now be able to get office supplies from the list. Since office supplies is a debit balance, is an expense, I would enter £1,000 on the debit side. This is a cash purchase based on the description. So the other leg of the account will be cash. So select the same dates and description. Have cash selected from the drop down and give it a credit entry. Cash has been reduced. Next, you received an electricity bill for £500. So give that a date. Write electricity bill as the description. Select utility expense from the drop down and enter £500 on the debit side. Utility is a debit balance in the income and expenditure accounts. Have the same date and description entered for the other leg of the entry. Accounts payable as a drop down, which is the current liability in the balance sheet, and have it recorded on the credit side. But let's say it was settled in cash. So I will select cash. Cash being a current asset with a debit balance, a reduction to it will be recorded as credit. So I would enter £500 on the credit side. And finally, you paid £10,000 as corporate income tax. So I would give that a date down below here. Write corporate tax payment as the description, or tax revenue depending on what description you feel like giving it. Select income tax expense from the drop down list for accounts. Now, income tax expense is a debit balance in the income and expenditure accounts. So an increase to it will be recorded as a debit. So I would enter £10,000 on the debit side. What will be the other leg of accounts? I mean, how are we going to settle the corporate tax? Is it with cash? Are we going to be paying it instrumentally? Let's say we are paying with cash. So select cash. Cash being an asset with a debit balance will be credited because there will be a reduction to it. And we are done posting. Now that we've got the basics down, the entries, let's start building your general ledger. We will be using pivot table to create the general ledger using the journal entries as the source data. The goal is to make everything dynamic and automated so you don't have to manually adjust anything later. So let's create the pivot table. The pivot table will allow us to organize and summarize data easily. So it's perfect for creating a dynamic ledger. So to create that, first click anywhere inside your journal table. This is important because Excel will know what data to use. Next, go to the Insert tab and select Pivot Table. You see a dialog box pop up. It's just asking where you want the pivot table to go. Make sure the table of the range is already filled with your data. We have it all selected to the bottom. Choose a new worksheet as the location and click OK. So a new worksheet has been opened with an empty pivot table. So let's rename this worksheet to General Ledger so it's easy to find later. And I'm going to have that moved to right after the General Journal. So now we want to structure the data so it's easy to read and analyze. This involves selecting the fields we need and placing them in the right areas. On the right side of the screen, you see the pivot table field. This is where the magic happens. So I'm going to drag dates to the rows area. If Excel automatically groups the dates, e.g. by month, right-click on any date and select Ungroup. We want individual dates to show. Now I'm going to drag accounts also to the rows area, right below dates. This will list all transactions under each month by dates. Drag debits to the values area. Excel should automatically set it to sum of debit. If not, click the drop-down arrow, choose Value Field Settings, and select Sum. We would also drag the credit field to the values area, just like we did to the debit. A well-formatted table is easier to read and work with. Let's clean things up a bit. Click on your pivot table. Go to the Design tab under Pivot Table Tools. Click Report Layout and choose Show in Tabular Form. This will display the data in rows and columns, just like a traditional table. Click Subtotals and select Do Not Show Subtotals. This removes unnecessary subtotals that can clutter the table. Now, under Report Layout, select Repeat All Items label. This ensures that account names appear on every row, making it easier to follow. So your table should now look cleaner and more organized, with each transaction neatly displayed by date and account. Now let's add a balance column. The balance column will show the net effect of all transactions. This is what makes your ledger truly useful. So go to the Pivot Table Analyze tab, click Fields, Items and Sets, then Calculated Field. Name the field Balance. And in the formula box, enter equals debit minus credit. Then click Add and OK. Right-click on the balance column, select Value Field Settings, then Number Format. We're going to choose Accounting Format and set decimals to 0. Click OK. Now you have a running balance for each account, showing the difference between debit and credit. I want my negative figures in brackets, so let's format that folder. So I'm going to right-click on the Sum Balance header again, click on Value Field Settings, Number Format, select Custom, and in the type box, I would have this pasted and click OK. Click OK. So now we have it just as I want it. Let's have this formatted further by giving it the comma style. Now let's add slicers. Slicers let you filter the ledger quickly, so you can focus on one specific account without scrolling endlessly. So to do that, go to the Pivot Table Analyze tab, click Insert Slicer, select Accounts, and click OK. I'm going to drag the slicer to the side of the table, resize it, and make it easy to click. So now you can click on any account in the slicer to filter the ledger and view only the transactions for that account. For instance, if I click on cash, you can see the table updates instantly. We can also add account categories, which is optional. We want to dynamically display the selected individual account type at the top of the general ledger. So go to A2 in the general ledger and type equals B4, or reference the corresponding cell in your pivot table that contains the individual account type. Then press enter. I'm going to have this formatted, increase the size and make it bold. So this ensures that cell A2 always reflects the selected account dynamically. Now when you change the selected account, in the pivot table, A2 will automatically update to show the corresponding account name. The sub-account type can also be linked in cell C2. So the sub-account type, e.g. current assets, revenue, expense, provides additional context for the selected account. So move to cell C2 in the general ledger sheet and use this VLOOKUP formula to fetch the sub-account type. I'm going to have this locked down. We want to return the result from the second column of the range. So I will type 2, then false for exact match. I'll quickly have this formatted in the same way that we've formatted the other one. So cell C2 now also dynamically shows the account type for the account selected in A2. Our cash is a current asset and is shown as that. Equipment is a fixed asset. Income tax is an expense, and revenue is an income. Now let's give a final touch to the general ledger. Go to the Design tab and apply a style you like. I think I like this one, so I'm going to select that because it matches with the slicer. And whenever you add new journal entries, you will need to have your pivot table refreshed to have the ledger updated automatically. And now you can use the slicer to focus on specific accounts like cash, inventory, or revenue. Check the balance column to see the net effect of transactions. This is saying we have a debit balance of this amount in cash. And review transactions for any account quickly by filtering the slicer. Now we're going to create the trial balance sheet. The trial balance is a summary of all accounts showing their debit and credit balances to ensure everything balances. So to do that, I'm going to right click on the General Ledger Sheet tab and select Move or Copy. In the dialog box, choose Create a Copy, select OK, and have the sheet moved to the end. I would have this new sheet renamed as Trial Balance. So now you have a duplicate of the general ledger to work from. The trial balance only shows account balances. We don't need detailed transactions or descriptions. So I'm going to have the unnecessary columns removed. We don't need the date, so I will have date removed. I would have the slicer removed. And at the top here, I would delete the individual accounts and the sub accounts. They are not needed for a trial balance. And have it replaced with the heading Trial Balance. So now we are left with a clean table showing only accounts, debit balances, and credit balances. At the bottom, we have the totals. These totals need to match. That is, the total of your debit balance has to match with the total of the credit balance. It's an indication that your trial balance is balanced. Any discrepancies in the total indicate errors in your journal or general ledger. So this is like the quickest trial balance you can ever prepare. To give it a polished look, go to the View tab and uncheck Grid Lines. And you can have a thick border surrounding the table. So I'm just going to reduce this a bit, select the whole table, and give it a thick outside border. You can also have this reduced. And in fact, hide these unused columns. So this is what we have. I will do the same to the other accounts. So the general ledger and trial balance work hand in hand to ensure accurate financial reporting. And for every update you make to your journal or general ledger, you would have to always refresh your trial balance. And finally, always check that total debit equals total credit. Now, we're going to move to creating an income statement. An income statement summarizes your business revenue and expenses over a specific period to calculate your net profit or loss. It's the key report that tells the company if it's making money or losing money. I'd created a structure for the income statement in the background just to save time. So we need a clean and professional structure that's easy to follow. At the top here, I have the company's name, ABC Limited. Below that is income statement to label the report clearly. And I have a time frame, like for the period March to May 2024. This specifies the time span the report covers. So the header sets the stage, making the document look polished and professional. And I have all of this imputed. This is a standard template for income statements. To make things easy, we are going to add a helper column in the trial balance. It's going to be used to fetch sub-accounts, e.g. revenue, expense, etc. directly from the charts of accounts. So in a separate column here, I would label it sub-accounts and use this VLOOKUP formula to fetch the sub-accounts from the charts of accounts. I would lock this down. We want to return the sub-account column, which is the second column in the range. So type 2 and then false to get the exact match. So with that, we are able to tell that the sub-account for accounts payable is current liability. So if you have this formula dragged down for the other accounts, we would have the sub-account for the other accounts listed. We don't have anything listed for account receivable, and I think that's because we have a problem with this spelling. So I'm just going to copy the correct one at the top here and replace it with the one below, and it should be fine. We might need to refresh the pivot table, so go to the pivot table tab and refresh. You do the same also to the general journal table. Refresh all. And let's see if that fixed the problem. Yeah, so we are good now. So we have the sub accounts, like I said, for all the different accounts we have. This way, it's going to be easy for us to map the income statements. In addition to the sub accounts, we will also add the financial statements column to have accounts classified by their respective financial statements, that is income statements or balance sheets, for easier categorization. So right beside sub accounts, I'm going to label the column financial statements and also use the VLOOKUP colon to return the financial statement type for each sub account. So type in VLOOKUP B4, which is the first account type. Go to your chart of accounts sheet. What we need is the financial statement column, which is the second column in the range. So I will type 2 and then false for exact match. There's still an issue with spelling. So right here, current assets is spelled current assets and not current assets like we have here. So I'm going to have that replaced. So if I go to the trial balance, replace fixed assets, add a S to fixed assets, add S to expenses, and just correct everything across board. So I've gone ahead to have the spelling corrected to match with what we have here. So if you go to the trial balance, let's lock down these references by adding the $sign and have it dragged all the way down for the other sub accounts. Yes. So for every sub account, we know what financial statement will be used for recording. Current liabilities and current assets goes to the balance sheet. Your expenses goes to income statement, and revenue goes to income statement as well. What we need to prepare now is the income statement. So I'm going to filter this financial statement column by going to the data tab and select filter. So have it filtered to display just income statement. So now this way we are able to see the items that goes into our income statement at a glance. We will start with revenue. So if you go to the income statement, the first item we start with is the revenue or sales. Revenue is the lifeblood of the business. It's where the income comes from. So it deserves its own section. To make it dynamic, we're going to be using the VLOOKUP function as well to fetch the figure from the trial balance. But because what we have on the trial balance for sales is revenue, we will need to have this replaced with revenue as well for it to work. Now, type in the VLOOKUP formula. The lookup value is revenue. Our table array is in the trial balance sheet. And we want to return the balance in column 4. Type in false for exact match and enter. Revenue is typically a credit balance which appears negative in Excel. To make it more readable, we're going to have the result multiplied by -1. Now let's calculate the cost of goods sold. This represents the direct cost of producing or purchasing the goods you sell. So it's essential for calculating our gross profit. So we're going to use the same VLOOKUP to get the result for cost of goods sold. So if I have this formula dragged down for cost of goods sold, I should have the figure appear. We have 52,500, which is the same thing we have here. And remember, just like we did for revenue, this figure has also been adjusted by using -1. To get our gross profit, the cost of goods sold we would have to be deducted from the sales or revenue. So if I do a sum of that, I should get the cost of goods sold. So you can make that bold to make it stand out. But so far, we have covered revenue, so I'm going to have that highlighted just to keep track of the items we've covered. We have also covered cost of goods sold. Now we need to fetch our operating expenses. The first we have on the list is advert and promotion. So I would have that typed in here, just exactly as we have it on the trial balance. So the VLOOKUP works. I think I'm just going to have it copied to avoid any error. So we have advert and promotion. We have office supplies. we have rent, and then we have salaries expense, utilities expense. Copy that, have that placed in your income statement. So we've picked these two. We've picked advert and promotion. We have picked office supplies and rent. And now we are left with research and development. So have that copied as well. Have it pasted in your income statement. And let's highlight it. So those are the operating expenses we have. So now let's use the same VLOOKUP to fetch the figures. So I'm going to have this placed here and drag it down. There seems to be a problem with the spelling for advert and promotion. So I'm going to go back to that. Also research and development. So let's go back to advert and promotion. What do we have? Copy exactly what we have there and have it pasted here. So now we have all the operating expenses listed with the actual figures. And now we're going to sum all the operating expenses using the sum function. I would have a line placed right below this cell to act as the total line, and use the sum function to get the sum total of the operating expenses to have the total operating expenses. Now the operating profit. To get the operating profit, we would need to subtract the total operating expenses from the gross profit. So if you do a sum of that, we should have the total operating profit. We're doing a sum because we already have the total operating expense showing as negative. So this is the calculated operating profit. And now we have the tax. Taxes are used to reduce our final profit. It's a legal obligation we must account for. In our own case, we have a fixed tax amount, as you can see in the trial balance. It's a total of £10,000. So we're going to need that in the income statement. I'm just going to grab the balance of that amount and have it pasted against tax in the income statement. You can make that bold as well to make it stand out. And finally, our net profit. The net profit is what the company gets after deducting the income tax from the operating profit. So let's do a sum of that and let's see what we have as net profit. £146,000. And so with that, we are done preparing the income statement. So let's have this formatted a bit to make it look more professional. We're going to remove the grid lines. So go to the data tab, the view tab, and uncheck the box for grid lines. And we can also have it enclosed with a thick outside border. So go to the home tab and select the thick outside borders. And we can come here to highlight the income tax because we have worked on it. As you can see, all the income statement items has been picked and worked on. And this is our income statement at a glance. Now let's move on to preparing the balance sheet. What's a balance sheet? A balance sheet is a financial statement that shows the financial position of a business as of a specific date. It answers the questions like how much does the business own in terms of assets, how much does the business owe in terms of liabilities, and what is the net worth of the business, that is equity. So I've also gone ahead to create the structure for the balance sheet, as you can see here. So at the top of the sheet, I have the company's name, ABC Limited. Below it, I've added balance sheet as the title, and I have the date as at 30th May 2024. So this heading ensures the balance sheet communicates its purpose and time frame clearly. The balance sheet has also been divided into two equal parts. We have the assets part and we have the liabilities and equities part. Why? Because the balance sheet needs to follow the equation assets equals liability plus equity. So this format makes it easy to compare total assets with the sum of liabilities and equity. So assets represents what the business owns and is categorized into fixed assets and current assets. The fixed assets are long-term items like equipment or property, and the current assets are short-term items like cash, receivables, and inventory. So if we go back to our trial balance and let's filter for the balance sheet items, you can see that we have equipment listed as a fixed asset. So let's grab equipment put that into our balance sheet as a fixed asset and use VLOOKUP to fetch the figure from the trial balance. This is just to make it dynamic. Getting the figure from the fourth column, so type in 4 and then false for an exact match. That seems to be the only fixed asset we have. Yes, so let's highlight that just as a check. Now, since that's the only fixed asset we have, we can go ahead and get the total for our fixed asset, which is just this. Now, moving on to current assets. Let's go back to our trial balance to see what we have as current assets. We have cash and inventory. So let's get those two items. And have it dropped in our balance sheet under current assets. Now we're going to use the same VLOOKUP to fetch the figures for our current assets. So let's copy that formula and have it pasted below here. Now let's sum up all the current assets and have this labeled as total current assets, just like we have here for fixed assets. Rename that to current and format the total to make it bold. Also have a top header line added. And then finally, our total assets will be the sum of the total fixed assets and the total current assets. Make that bold. So now you have a detailed breakdown of the business assets with totals for fixed and current assets. Let's now move to listing the liabilities. Moving on to liabilities. Liabilities represent what the business holds, and it's categorized into fixed liabilities and current liabilities. Fixed liabilities are long-term obligations like loans, while current liabilities are short-term obligations like payables. Now, to list liabilities, we're going to need to go back to our trial balance and let's identify all the liabilities. So I'm going to filter this to see the results for all the balance sheets accounts. We have treated fixed assets. We have also treated the current assets. So let's have all that highlighted to know the ones we have left. Now, of these 3 items remaining, we have just one long-term liability, which is this. So I will copy that and have it pasted in my balance sheet as a fixed liability, and then use the VLOOKUP formula to fetch the figure from there. We want to return the item from the 5th column. So I'm going to type 5 and then false. Now that's the only fixed liability we have. So let's highlight that yellow and we get the total for the fixed liabilities, which is just simply this. We make that bold. Now moving on to current liabilities. Let's see how many we have. We have just one, the short-term loan liability. So let's pick that, have it copied and pasted in the balance sheet under current liabilities. And we get the figure for that as well. Now our total current liabilities is also just this one. Make it bold. To get our total liabilities, we add the sum of the fixed liabilities together with the sum of the total current liabilities. That will give us the total liabilities. So with that, we have a breakdown of the business obligations. Moving on to equity. Equity represents the owner's investment and retained earnings. So let's go to our trial balance. So we fixed this. I'm going to highlight that yellow, and then we capture our equity, which is a sum of £1 million. So let's copy that, have it pasted under equity, and we get the sum total for that as well, and fetch the balance using VLOOKUP. Now we need to add retained earnings. If you recall, the definition of equity is the owner's investment and the retained earnings. Retained earnings comes from net profit on the income statement. So let's link the net profit from the income statement. I'll have the net profit copied and pasted right after owner's equity, and have the balance linked from there as well. Sum all equity accounts by adding owner's equity plus the net profit. Make that bold to make it stand out and place a line right above it, like so. And so with that, we've captured owner's stake in the business. This is the amount they invested at the beginning of the business, and this is the profit they have made from the business. Yes, it's a profit, but the owner can decide to have it added back to the business as an equity. If any money is going to be withdrawn from here, it's going to be termed drawings. Now, there's the need to validate the balance sheet. The equation assets equals liability and equity must hold true for the balance sheet to be correct. So these two totals has to be the same thing for your balance sheet to be correct. Let's add the total liabilities with the total equity to get this figure. So I'll put in the equal sign, get the total liability figure, and add that to the total equity. You can see a difference of about £100,000. So we need to have this reviewed again to know where the problem is coming from. And the best place to go to is the trial balance. Let's see, is there anything we've left out in the balance sheet account? So we've covered equity. Let's have that highlighted yellow. And let's see, oh, look at that. We have current liabilities and current assets still left out. And that's the accounts payables and accounts receivables. So let's have that added quickly to our balance sheet. The accounts payable is a current liability. So we're going to place that right under short-term loan liability. And the figure for that is £200,000. So get the figure and have it included here. Have it added up to the total. We need to highlight this so we don't get confused again. So we have an accounts receivable of £3,000. So let's get our accounts receivable and have that placed in a balance sheet. It's supposed to be here. So I'm going to make a little adjustment right now. The reason I'm doing this is to have all the total line items align on both sides of the account. And with that, we've been able to make our balance sheet balanced. We have £2,396,000 on the asset side, and we have the same amount, £2,396,000 on the total liabilities and equity side. And the company's financial statement now reflects the true financial position of the business. To format this, let's remove the grid lines and make it appear as a report view. So uncheck the box for grid lines and correct the borders. And we are done. We have a balanced balance sheet. We have our income statement showing the net profit. We've got the trial balance, which is also balanced. We have our general ledger with the slicers making it easy for you to select what accounts to focus on. We have the general journal, which is the first accounting entries, and then we have the charts of accounts. And that brings us to the end of this video. I hope you found this tutorial helpful and now feel more confident in handling accounting tasks in Excel. If you have any questions or need further clarification, feel free to drop them in the comments below. I'd love to help. And if you enjoyed this video, don't forget to give it a thumbs up, share it with others who might find it useful, and don't forget to subscribe to the channel. Thank you for watching, and I'll see you in the next video. Happy learning!